Welcome to Coin Engine, where we dive deep into the world of cryptocurrency and all the latest developments in the industry. Today, we're discussing the recent US banking Cutoff and how it presents an opportunity for crypto in Europe. As crypto firms in the US scramble for alternatives to Silvergate and Signature Bank, we explore how Europe could capitalize on the situation. Have you ever wondered why the US has been the center of crypto since its inception, while Europe has struggled at times to keep up with the pace of innovation? Will a US bank come forward and welcome crypto deposits, or will Europe take advantage of the situation and gain relevance in an industry they have been lacking of late? Join us as we explore all these questions and more. Regulatory clarity in Europe. Connor Ryder, a research analyst at leading crypto data firm Cutoff, explains that the longer it takes US banks to declare they're open for crypto business, the more likely it is that crypto firms could choose somewhere like Europe with more regulatory clarity and easier fiat payment rails. Regulatory clarity in Europe, in the form of MiCA, the Markets in Crypto Assets Act, paints a stark contrast to the ambiguity in the US, where firms face new regulatory headwinds seemingly every day. This creates an increasingly challenging environment for the operations of any crypto organization. For new and existing market entrants, this is going to be a significant consideration. In addition, it seems that US policymakers are doing their best to suffocate dollar on-ramps into crypto, leaving the door wide open for the rest of the world to gain a competitive edge over the US, trading with stablecoins. When it comes to trading, the good news for investors is that the crypto industry has become increasingly less reliant on fiat currencies over the past few years. In fact, the percentage of market share of all volume on centralized exchanges for stablecoins just hit an all-time high following the Silvergate troubles last week, as investors continue to prefer stablecoins to traditional fiat. In the last year alone, stablecoins have risen from 79% of volumes to over 90%, commanding the vast majority of volumes on exchanges. Less of a reliance on fiat means the banking cutoff in the US actually directly hurts crypto investors less. Crypto investors are increasingly using stablecoins as a means of transacting, but the businesses behind the platforms traders use are not. It is these institutions themselves that will feel the brunt of a dollar USD Cutoff first. Impact on businesses. Having no access to a US bank means businesses such as exchanges will have to change their approach to the services they can offer. Take trading hours, for instance. If an exchange has no access to 24/7 USD payment networks, it is well within the realm of possibilities that US exchanges could only serve customers during US trading hours. In this scenario, US-based investment funds could also suffer via the opportunity cost of missed trading strategies outside of trading hours. Euro gains. Euro volumes, however, are showing that one region's pain is another's gain. Early indicators are that the euro may be a big winner of a US crypto banking cutoff, with volumes spiking for the BTC-EUR pair as the Silvergate troubles ensued. The Bitcoin-Euro pair hit its highest level of market share against the US dollar ever, rising to 21% of BTC volumes last week from 7% in November. The million-dollar question is whether a bank will raise its hand in the US and welcome crypto deposits. The bigger banks have no incentive to take on crypto deposits right now, especially with the consolidation of bigger banks we're seeing in the banking sector. Will a US bank come forward? That's the million-dollar question, and the answer remains uncertain. While some smaller banks may be willing to take on crypto deposits to attract new customers, the larger banks have little incentive to do so, especially given the current regulatory environment and the consolidation of bigger banks in the banking sector. In the ideal scenario, several smaller banks would open their doors to crypto, spreading the risk more evenly across a few different banks instead of concentrating all crypto deposits in a couple of banks, as was the case before. However, the smaller banks will likely see Silvergate and Signature as cautionary tales of banks that could not diversify their deposits sufficiently to protect themselves from a bank run. As a result, it could take a while before we see the next batch of banks opening their doors to crypto. The longer it takes for US banks to declare they're open for crypto business, the more likely it is that crypto firms could choose Europe, which has more regulatory clarity and easier fiat payment rails, over the US regulatory clarity in Europe in the form of MiCA. The Markets in Crypto Assets Act stands in stark contrast to the ambiguity in the US, where firms face new regulatory headwinds seemingly every day. This creates an increasingly challenging environment for the operations of any crypto organization. For new and existing market entrants, this is going to be a significant consideration. As the crypto industry continues to evolve, it is important to keep an eye on global trends and developments, especially in the wake of recent events. By staying informed, investors can make more informed decisions and capitalize on emerging opportunities. If you enjoyed this video, please like and subscribe to our channel for more updates and insights into the world of crypto. Don't forget to hit the notification bell to stay up to date on our latest videos. Thanks for watching.